This video is going to work through problem 6.6 from Gapenski's Healthcare Finance, 6th edition. Okay, in 6.6, we return to the direct method, so we're no longer doing step down. And we're looking at, let's see, we're going to use the same drivers as in problem 6.4. So that means general administration is going to be allocated based on salaries, and facilities is going to be based on housekeeping hours. However, we're going to assume that $2 million of the financial services costs is related to billing and managerial reporting, and $1 million is related to payroll and personnel management. It says devise and implement a cost allocation scheme that recognizes that the financial services department has two widely different functions. Okay. So this is common, so when I was worked in the financial office where I supervised a finance division, I had 4 different functions. They were all quite different. I had one section did budget, one section did managerial accounting, one section did an HR function, and then another section did billing. So those 4 sections really had very different cost to drivers, if you would think about it. And so it would be appropriate to have the allocation be different. So in this case, we have this division, financial services, and it's got 2 different functions. So let's change that now. We're going to call it financial services. And so they have billing, we'll call it billing, and financial services, payroll. And our assumption here is, and we're going to kind of ignore this line, our assumption here is $2 million goes to payroll and to billing, and $1 million goes to payroll. Another 0. And we're doing direct, so the cost pool is going to equal the direct cost. And we need to add all of the rows, and so we're back to 10 million. So yay, we're good there. Okay. I just read to you that the cost drivers are going to be the same for general admin and facilities. So the cost driver for general admin, right, was salaries. So we're going to, and since we're back in direct, we're going to ignore the salaries up here, and we're only going to focus on the salaries from the supported departments. The driver for facilities is housekeeping hours. And again, because we're back in direct, we're going to ignore the hours up here in the supported departments or support departments. And then for billing, okay, now we need to think about things. All right, billing. What of the choices of drivers that we have, revenue, square feet, housekeeping hours, and salaries, makes the most sense for allocating billing costs? Well, the only one that's really directly related to billing is the revenue that's brought in. So that's the closest. Probably not the optimal one, but it's the closest. So we will use total revenues as our cost driver. And then what is the best of the 4 options we have, revenue, square feet, housekeeping hours, and salaries, as a driver for payroll? Well, it's probably going to be salaries, right? Even though probably a better one would be headcount. We'll use total salaries as our driver. So we have our cost pools. We have our cost drivers, so our allocation rate is simply our cost pool divided by our cost driver. And I can just copy that down thanks to the magic of Excel. So I wind up with 7 cents of general administration per dollar of salary, $22.73 of facilities charges for every hour of housekeeping, 4 cents per dollar of bills or of revenue goes to billing, and a 3-cent charge for every dollar of salaries goes to fund payroll or pays for payroll. So those would be our new allocations, or excuse me, allocation rates. Let's see, we don't need these lines. So is there additional information that'd be useful in completing part A of this problem? So your book suggests maybe better information on billing or the use of management reports, use of payroll support, such as number of employees, might have a better allocation system. So I already commented on that. So like if I was going to actually look at billing, I think I would want to know the number of bills rather than the value of the bills, because for a biller to bill, you can have, if it's really relies on the number of lines, that the biller is entering. It doesn't matter if the line has a big dollar amount or a small dollar amount. It takes the same amount of effort for a biller to send out a $10,000 bill with, 2 lines on it as it does to send out a $100 bill with 2 lines on it, right? The dollar amount doesn't drive how much effort is involved in actually billing. So I would say you'd either want, the number of bills or the number of lines on the bill or something like that to get a better driver. For payroll, I think, again, you could have a department with very high paid individuals. Let's say the payroll for, I don't know, the budget shop would have a bunch of fairly high paid people. Let's say that each of them makes $100,000 a year and there's 5 of them, so that's $500,000 a year in revenues. And then you have maybe in your nutrition care area, right? You have your cooks and they're making, say, $30,000 a year, or let's say $25,000 a year, just to make my math easier. Well, that would be like 20 people. So for, again, like billing, payroll, the amount of work in payroll is really more about the number of people supported than it is about the dollars actually paid to the people, because it takes the same amount of effort to pay one person that makes $100,000 as it does to pay somebody who makes $25,000. So I would probably a better driver would be payroll. For payroll would be the number of people in a department rather than the salaries for the department. But salaries is good enough if that's all we've got. All right, and so that's part B. And then part C are, what are the costs and benefits to St. Benedict's of creating 2 cost pools for the allocation of financial services costs? There's a trade-off every time you add more granularity. So we're just adding another layer here, another line. We're doing it electronically, so it's not that much work. And, probably once it's set up, it's not that much work, but it is more work, at least initially. And so, ultimately the question becomes, is the juice worth the squeeze? Is the cost worth the benefits that you reap? So that's it for problem 6.6.